Bagnell with BNN Bloomberg, who's standing by in downtown Toronto with more. Stop playing politics, the president says to the head of the Federal Reserve, who is supposed to, of course, not be involved in politics. And certainly Jerome Powell giving no indication that he's ever really gotten involved in politics, Paul.
Yeah, it always has been a fraught relationship between U.S. President Donald Trump and Jerome Powell, the chair of the U.S. Fed. It was during the first Trump administration. It remains that way. The conventional relationship, of course, between senior politicians and central bank officials is essentially is a hands-off relationship on both sides. Donald Trump, of course, doesn't pay attention to rules like that, and so he's never hesitated to bully or pressure the chair of the Federal Reserve Board. What I can tell you, Todd, is that the predictions of an economic slowdown in the United States are causing many investors in the fixed income market to believe that the Fed will be required to reduce its interest rates sooner than it otherwise would have been. For instance, the Fed is next due to make a rate announcement in early May. The market is now saying that that's a 50-50, essentially a coin flip as to whether the Fed cuts its benchmark rate by 1/4 percentage point on that day or not. What's not a coin flip any longer is the one that comes next. That's on June the 18th, where the market is now heavily betting that the Fed will cut its benchmark interest rate on June the 18th. Prior to all of this, Todd, the market was assuming 1 or 2 rate cuts from the Fed way at the latter portion of 2025. So in summary, what the tariff situation has done is raised all kinds of concerns about economic growth in the United States, concerns about an economic slowdown in the U.S., requiring the Fed to come to the rescue to the degree that it is capable of doing so by cutting interest rates.
And what about China, Paul, hitting back? You know, now we're looking at the edge of a global trade war, the Chinese hitting the Americans back with 34% tariffs, and what that's going to mean, the two big economic superpowers of the world now going at it.
That's exactly the right way to think about it, Todd. The investors around the world are concerned that we are now in the very early stages of a trade war where dominant economies around the world, and the U.S. is #1 and China is #2, erect trade barriers to block the other's products from entering its own markets or making those products much, much more expensive when they inevitably make their way into each other's markets. There is a pretty clear playbook on tariffs, and both Canada and China are following the same playbook, and that is you respond percentage point by percentage point to the tariffs that have been imposed on your products being shipped into your trading partner's market. And so both Canada and China in broad strokes have responded the same way. The Chinese response is more globally significant because China is a huge economy.
Paul Bagnell with BNN Bloomberg in downtown Toronto as we watch the markets falling steeply today. Huge losses. Thank you for this, Paul. We'll check in again.
Thank you, Todd.